Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from rainy, not sunny Philadelphia, Dimitri Parkamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Perfect. So what's going on this morning in the pre-market?
Yep, let me share my screen. And if you guys are joining us for the first time, the purpose of the show is really to take questions and answer any questions you guys might have on the Market Chameleon tools, data analytics. If you want to discuss strategies or something unusual you've seen and you'd like to bring it up to the community, we welcome that. There are two ways to ask questions. One is to put the question on the live chat on YouTube. Will's watching it, he'll read it back to me. Or if you want to come on the show and ask your question live, we also provide a link to Zoom. Click on that link, that takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. It'll prompt you and ask you that. But once we let you in, everybody could hear you and you could ask your question live and direct. While we're waiting for questions to come in, what we'll do is start out looking at the pre-market report, see what's trading in pre-market hours. I'll navigate to some reports, see if we can get some insights on the markets. If questions come in, Will, you'll stop me and let me know, and we will take those as they come in.
Perfect.
Okay. So pre-market report, these are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, we see 40 stocks made our percentage gainers list, 142 on our percentage decliners list. So from this perspective, right now we're looking like a more bearish bias at the open. What we want to do is filter down this list because we could see here we have small cap stocks in the list, ETFs, leverage products, closed-end funds, preferreds, anything that's listed on the major U.S. stock exchanges. And to get a little bit better insights, let's narrow down this list to a certain group of stocks. And what we'll do is look at the S&P 500 companies, see what's going on there. And to do that, I'm going to use this filter here in ETF and drop it down and get a list of ETFs. When you select one of these ETFs, the report below will get filtered by stocks or holdings in that ETF. So here, let's select SPY. That's the S&P 500 ETF. And as you can see here, now it filtered out stocks that are in the SPY ETF. Here we have 0 that made our percentage gainers list, 37 on the decliners. So from this perspective, we are lining up as bearish bias at the open. Couple new things that I wanted to mention right now before I move on is we make regular updates to the website to make improvements. Lots of times these improvements, it's in the background, so you won't see it. It's either enhancing the speed or the performance, maybe the length of the data, but we're continuously doing it, and then sometimes we are adding features. I don't always bring them up because we do them often, but the one that we did last night was this search box here, and it used to be just a symbol search. And from getting feedback from customers trying to navigate the website, because we do have a lot of data analytics from lots of different perspectives, and it becomes hard to find things or navigate. So we created a different navigation tool, you could still search up symbol like you did before. Just put in Apple. If you click enter or select it here, you'll go to the main page. But if you're looking for something maybe different, you could see it's starting to give suggestions like, Apple, I don't know, IV SKU. It'll search the website and give you suggestions on different ways or pages that you could go and analyze that. Okay. Maybe Apple option chain. All right, looking for that. So bring it up here. So you could click on it and go to that. It's a quicker, it's definitely a quicker way to find things than going through the menus, right? If you're looking for something specific and our website has it, it's going to scan the website for you and try to find you something that's matching your keyword searches. Okay, so that's something new, and we did publish it yesterday. Anytime we do test things internally before we publish, and we work out any bugs ahead of time. But once you publish and it's external, and then we have, tens of thousands of users using it at the same time, then there are different bugs that we see on our end that we didn't test for, because it's impossible to test for every single bug, especially you guys use it sometimes a lot differently than when in our test environment. So I do see some bugs coming in that we're going to be fixing overnight. Some of the menu items aren't there. I think one is missing the open interest, so I'm fixing this bug. And as we get more feedback, you guys email us that you're seeing bugs with that new feature, because this is a kind of a big update, because that tool gets used a lot, right? Searching for symbols and so forth. But keep in mind, this is new. We just brought it out last night. It's possible you guys will run into bugs because, just in the first couple hours, we already got emails of people seeing bugs right away. But we are working on fixing the ones that we know. And if you see it, just email us so we're aware of it and we could fix it. We're going to be fixing it all day today, whatever we see. So tomorrow, publish it overnight tomorrow. Those will get fixed. Okay. And even on the show, Will, sometimes, we get people asking, well, how did you get to this page? How to get to this page? I think this will help, right? I think that this will help because now you could search by keywords and you could see that it's showing you the pages. Okay. Like so.
Well, Robert Black just said the new tool answered my question on how to find commodity ETFs. So there you go.
Oh, okay. Awesome. So there you go. And by the way, this will also help us as well internally, because if we're seeing something that there's a big demand for we didn't think about, maybe that will also help us improve the website in other ways, that we were not able to before. Let's take
and like all new features, if anyone sees any bugs or issues, or you're getting results that you wouldn't expect, please try to take a screenshot and email us, support@MarketChameleon.com, and let us know. That way we can make adjustments and see what if there's anything that may be.
Yeah, because our developers right now, they're watching, they're watching it, and I know they're fixing stuff already. And sometimes it's like just minor things that we did not test for, didn't think about, ways that you might be using it. Because again, in our test environment, we're testing for things that we think are the most obvious things to test for, and when you have, lots of users using it different ways that we did not account for, sometimes you'll get bugs. So this might be a little bit buggy today, but we'll see. As I said, that there are known bugs already that we're going to be fixing overnight. And again, we gave an example here, like Apple. You could type in Apple earnings, right? It doesn't have to be just a symbol. You can do other keywords.
Hey D, while you're on the stock pre-market, I know we do have deeper analysis. Someone's asking, he just joined, T-Boy. He's saying, good morning, everybody. Is there any way to demonstrate how your system, and I know neither you or I are day traders, so there's nothing I use on it for day trading, but he's asking, demonstrate how your system can help a day trader or swing trader maybe find some data or things that could be useful. He says have edge in a bull or bear market, he says.
Okay. So, I'll go deeper into like some of the data today to do analysis, but one thing I want to comment is that I do not believe that retail traders who say that they think they're going to swing trade, when I hear that, I don't even want to cater to that, because I know that you're at such a big disadvantage. And the thought process is that I'm gonna trade and basically guess if the stock is going to go up or down from this moment. And that's really a thought process from the very beginner, which is it's a flawed thinking. Okay. And when you're looking at, financial modeling or financial trading, and, there's much more involved and advanced than that. And if you're just sticking to that, like swing trading, trying to guess, I just think you're flawed in your thinking about how, like, about trading, financial trading. You're setting yourself up to lose, and you're essentially, in my opinion, just gambling. Okay, so that's what, and I don't want to be like kind of a part of that because I feel like, because I discourage, right? Like swing trading, day trading. When people say that to me, and from a retail perspective, I get really worried, and I say, well, we don't cater to that at all. But let's take a look maybe into some insights into the data, okay? And just see like how the stock tended to behave, because think of it as more, what do I think is more likely going to happen? If I create a strategy, right? If I create some strategy, what do I think most likely will happen? And when I think of trading, I think of more like where something has diverged from a perceived benchmark or value. Okay. Like then, or how do I spread something off? I think of it in terms of like spreads. How do I hedge it? How do I reduce my risk? How do I, buy something that's undervalued, sell something overvalued, reduce my risk, and so forth. And we talk about strategies a lot here. But let's just take a look at maybe NUZ. Here's a stock that is up 15% in the pre-market hours, right? So this stock was up 54% yesterday, up another 18%, I guess, right now in the morning. Of course, I don't know much about the stock. You'd have to look up the news, because that is reacting to something, right? It's reacting to some kind of a news event that it's up so much. And that's always going to be important, how you interpret that news. If we look at the data from the perspectives, what usually happens when this particular stock gaps up, right? And this situation may be different, because I'm seeing I am seeing something's going on. Okay. But let's just, from the perspective, what are the distribution of returns after this stock goes up? What do I think is likely, more likely to happen if, I don't know anything about the news. I didn't analyze the news yet. I didn't analyze like what it means for the stock, but just the price action. That's how I'm going to first approach it. So that's just one analysis. So I'm going to take a look at the gap up history. Okay. And I'm going to look at its history of gaps, and I see here, these are the 12 biggest gaps in the last 2 years, on average 21.5%, kind of close to where we are here, right? So when that happened historically, right, what did that stock tend to do? When it opened up around up 20%, the rest of the day, did it continue on an upward projection? Did it back off? How did this stock tend to behave? Okay, so here historically we see that on gaps like this, if we use the opening price as our initial, so it's gonna, let's say gaps up, right? So now there's an opening price, it moved higher. What happens afterwards, right? Because we can't go back the previous day and buy it at a cheaper price, right? That's it, it gapped higher. So what happens going forward is our question, what tended to happen going forward after the gap up? And we look at it from the perspective of distribution curve, like returns of distribution. We don't know if it's going to go up or down. We don't know that, but we want to see the frequency of ups and downs and the magnitudes of the ups and downs to get ourselves an idea of potential outcomes, right? What is the higher probability of potential outcomes after something like this happens? That's what we're trying to do. Okay. So we have 3 different ways to look at it here after the opening. So let's assume it gaps opens somewhere around here. So what tended to happen to this stock? So we see that from the opening price to the high of the day, the average move was 7.5%. Okay. So that's the average move from the opening to the high of the day. But we could see that there are, data's right in front of us, there are a lot of zeros here, which means that that opening price was the high and it didn't move any higher. But there were a couple, look, that this one moved up another 40%. This one moved up another 27.5%. So you could see here that it many times that opening price was the high, but when it went higher, it could explode. Right? You could see here 40%. The last 2 times, look, up 40%, up 27.5. So now we're painting a picture of how this stock could potentially move, and we see it could be very volatile. So, and a lot of times that opening gap was an overreaction, right? That we see it here. That does happen, but sometimes it really gaps up. So now we kind of see, potentially how can this stock move, and if you took Dow Jones stocks, it's not going to look this way, right? So every stock behaves differently based on its liquidity and so forth. On the downside, right, when it opened up, we see that on average, the down move from the opening to the low was down 18.5%. So even those days that it continued higher, like this 40%, when it still had some downside risk. This one, even though it went as high as up 40%, you could see that from the opening price, it was also down as much as 13%. So what is this telling us is that when this gaps up, these two, when it gaps up, the downside magnitude tended to be larger than the upside, okay, on average. So on average, if we took the average from open to high, up 7.5%, to the downside, down 18.5%. Okay, that's one thing it's telling us. It's also telling us that more frequently that on the gaps up, right, that initial gap was the high of the day, right? That's where the data is telling us so far. And what about to the end of the day? So from the opening, if we held it all the way to the end of the day, you could see so far it could not hold on to those gains, those initial gains. It was not able to hold on to those initial gains, and historically finished lower than the opening price, not the previous day's price, the opening price. Okay, so it didn't finish down on the day compared to previous days. That's important. From the open price, so on the day could have still been up, but from the opening price, it tended to finish lower, on average down 13.9%. Okay, so even though that stock gapped up, there was a drag to the downside, tended to be a drag to the downside in this particular stock. Does that make sense to people so far?
Yeah, that's helpful.
Right. Why do we look at ranges, right? Where is the stock overextended, or where did it sell off too much, or where could potentially get to, right, from this price? Because when we look at stock return distributions, it's ranges. Think of it as ranges. Is it overdone, underdone? You know, is it trading within the expected range? So when I think of stocks, I think about it in terms of ranges, okay, and potential ranges. And that's why we look at the distribution of returns. If you're trading options, it's always, distribution of returns. That's what you're looking at in an options chain. So this is one way to start looking at data to help you along. If you're making certain decisions about, what you want to do or how you want to strategize around the stock. It is also important to go and look at what the news is and what else is impacting this price. Because, and I'll give you an example. If, let's say, the news is that they're getting taken over for $20 per share, right? Like cash. Well, then that makes a difference, because then it's unlikely to just come back down like that, right? Because it's trading below $20 or $21. I'm not saying that is the news. I'm just saying if that was the news, that changes things, right? Because that didn't happen in the past, right? And if that's the new news, then you got to reconsider everything. And then your analysis should be, well, how likely is that takeover? Is it likely that it will go through or not? Okay, so let me know if there's any follow-up questions on it.
Nope, that's good.
Okay, well, if not, I think then I'll just end it there. We're getting close to 9:30.
All right, perfect, D. Great job. Thank you, my friend.
Okay. All right, thanks everyone for joining. Stay safe out there. Have a great trading day, and we